The S&P 500 surged following the European Central Bank's decision to cut interest rates further on anticipation that the Federal Reserve and other global banks may follow suit and continue to ease monetary policy. Mark, what are your thoughts going into the all-important U.S. rate decision next week?
After Draghi's aggressive moves yesterday, the hands of the Fed are pretty much tied. The decision serves to dampen the potential effect of the meeting next week.
And do you think all this quantitative easing, is it beneficial for the markets, or are we just inflating the asset bubble here?
Look, quantitative easing has both pros and cons, right? On the one hand, it stimulates spending and cushions recessions. On the other hand, it artificially inflates assets, potentially causing bubbles. This ultimately results in a yield chase amongst investors, which we've seen quite a bit in recent history. And eventually, the markets have to survive without quantitative easing, and any transition causes volatility.
So right now, are you long the market? Does it make sense to get in at this point, or are we very topped out here?
You know, it's hard to say. The volatility is such that it's hard to say where we are today.
Right.
Realistically, the economy is not in good shape still, and that ultimately has to play itself out.
All right. Thank you very much, Mark. For the Voice of America in New York, I'm Jill Malandrino.